Hi, it's Vina White from WellSafe, Australia's #1 cryptocurrency tax specialist. I have a strong passion for blockchain technology and digital assets with a dedication to staying at the forefront of these developments. I've spent the last 10 years specialising in the cryptocurrency taxation space and have kept a close eye as law evolves. In today's video, I'll do a deep dive into how the ATO views cryptos, the structures you should consider, and tips for staying compliant while minimising your tax liabilities. The ATO focuses on what's called self-assessment, which is incredibly important because it gives you the opportunity to make decisions around how you structure your affairs. So in today's video, I wanted to share the 9 most highly asked crypto questions and answers to help you keep the maximum profits from your crypto gains, whether you are a cryptocurrency beginner, a part-time or full-time investor, or you're an advanced successful trader. I'm sharing this video with you today because I am constantly inundated with questions from existing and potential clients eager to learn how we can help them maximize their gains and keep more of their profits. Our complete crypto control formula has been proven and optimized for a decade, working closely with some of the world's most successful crypto traders and investors, ranging from 7, 8, 9, and even 10-figure portfolios. That being said, let's start with question number 1. What are the tax laws around cryptocurrency? Are they different from, say, stocks, precious metals, or property? The way that the tax office views crypto, they don't view it as money. They view it as property, a capital gains tax asset for tax purposes. So under Australian tax law, cryptocurrency is classified as an asset, which means it's subject to taxation. In other words, cryptocurrencies have the same tax laws as every other asset class. There's no special laws for cryptocurrency. And given that there is no specific tax rate for capital gains, the capital gains get added to your other sources of assessable income and taxed at your individual rate. What is the difference between an investor and a trader? Now, this is a tricky one because the ATO talks a lot about your intention. So understanding whether you are a cryptocurrency investor or a trader in tax is crucial for tax compliance purposes. A way to think about this is that if you are buying and selling coins and doing it regularly, you are more likely to be considered a trader by the ATO. On the other hand, if you're buying and holding for periods and selling from time to time at a profit, you're more likely to be considered an investor by the ATO and capital gain tax will apply. Therefore, we recommend that you keep accurate records if you're selling a crypto coin at a profit. How important is it to set up the right structure early on, and what are the options if I've already bought cryptos in my name or made profits without proper structuring? Structuring early on is critical. There are 2 possibilities for setting up a structure. The first is definitely before you buy the cryptos. This is often the ideal time to do it. The second is after you buy the cryptos. This is more common but may lead to unintended tax consequences because once you've already derived the gain on cryptos, it's too late to do much about it if you haven't organised to buy your cryptos inside the structure. But as a rule of thumb, there is less we can do if you've already derived the gain. There could be potential options to look at, and we'll do that. But that's why it's essential to set yourself up correctly in the first place, rather than leave it until it becomes a big problem. This is why we tell clients that if they anticipate large profits, it is often best to wear some of the tax now and get set up properly and pay much less tax in the future. So for those that are serious about crypto trading and investing, I highly recommend using a trust or an entity instead of holding the crypto as an individual. Because when there's a boom in the marketplace and you make profits, it's all in your own name and you'll end up with a huge tax bill. And you also leave yourself exposed in terms of asset protection. This is why I really like trusts, because it separates your assets from personal holdings, offering better tax rates and robust asset protection. Here's why trusts work so well. Number one, capital gain tax discounts. If you hold your crypto for more than 12 months, you qualify for a 50% capital gain tax discount, which does not apply to companies. Number two, asset protection. It protects you against lawsuits and other financial risks. Three, flexibility. Profits can be distributed to beneficiaries, including corporate beneficiaries, which means a lower tax rate. For example, say you have a $100,000 profit from long-term gains on crypto. You apply the 12-month capital gain tax discount of 50%, reducing it to $50,000. With a discretionary trust, you have the discretion to determine how to distribute that profit, either to related individuals listed as beneficiaries in the trust deed or to a corporate beneficiary, more commonly known as a backer company, which I highly recommend for tax planning around crypto and long-term profits. If you distribute to a backer company, you're paying tax at the rate of 30%. So 30% of $50,000 is what you pay in tax, which is $15,000. So by applying the discount and making a distribution into the backer company, you effectively reduce your tax rate to 15%. How do you buy crypto under a trust, especially if you use a cold wallet like a Ledger or Trezor? One way is to open an exchange account in the name of the trust structure. However, this can be difficult to do in practice. Plus, with a Trezor or Ledger, it is physically held. So what we do is that we recommend that people use a mixture of service agreements and trust minutes to link the cryptos with the trust structure correctly. However, this is a complicated process, so we do recommend that you have an expert assist you with this. Could you explain more about service agreements and minutes and what it means if I'm new to crypto? Basically, service agreements or crypto service agreements are legal documents, legal agreements that state that although you have the cryptos held in your name, they are effectively held on behalf of your structure. The minutes give effect to this by the trust stating that all cryptos are held in your name on its behalf. This ensures that if the ATO ever looks at it down the track, the crypto belongs to the structure. Do I need to declare and pay tax when converting crypto to fiat, and am I required to record all my crypto transactions? What records should I maintain for compliance? Now, the simple answer to this question is yes, you do. The ATO have stated that you must keep records of all transactions and that really the onus is on you to ensure that they are accurate, that is within crypto exchanges as well as bank account statements. So whether you sell, purchase, transfer, gift, mine, stake, receive airdrops or anything like that, the ATO considers all of these as taxable events and they are closely monitoring these transactions. The ATO have also made it clear that you need to be straightforward and make a clear decision about how you're holding your investments. They expect that you have a declaration in place about your intention and long-term plans for your crypto. Now, this doesn't necessarily have to be at the time of purchase, but certainly by the time you prepare or lodge your tax return. So now I'll give you some tips on what you need to keep on file just in case the ATO requests this information from you. Remember that the ATO considers a coin-to-coin and coin-to-fiat transactions as taxable events. So you are expected to keep track of all the data along the way. There are cloud-based systems where you can import transactions and produce tax reports, but some people prefer to keep their data offline. Both methods are acceptable, but you must ensure you keep accurate data. The ATO is increasingly monitoring transactions, especially those on public exchanges, expecting you to lodge a tax return including this income. And if you don't, you do run the risk of an audit. So it's best to keep any declarations and deeds of sales and purchases, whether in the name of a trust, a company, or another entity. These transactions can be recorded in Excel, offline, or using a software system such as coin tracking, CoinLead, tax calculator, or something similar. Tracking transactions also helps you to identify which coins are eligible for the 50% capital gain tax discount, so you don't unknowingly donate any extra tax that you don't have to. So remember to have a system in place for tracking your coins. How easy is opening a centralized crypto exchange account under a trust, and does every exchange allow this? Look, although in theory it is possible, we find that in practice it's challenging to do so. For example, Binance makes it nearly impossible to open up an account in the name of a trust. However, you have CoinSpot on the other hand, which will let you open up in the name of a trust quite easily. This is why we prefer you have cryptocurrency service agreements and trust minutes. Have you or any of your clients had trouble setting up a bank account for cryptos when you have a trust? Yes, we have. Some banks seem to think that cryptos are a potential money laundering tool and refuse as soon as they get any inkling that cryptos are involved. This is where the service agreements and minutes are helpful, because you can still open the bank account in the name of the trust, but make no mention of the cryptos, as technically they are held in your name. What are the hidden traps to look out for in cryptos? Make sure you're structured correctly from the beginning. Don't delay this. Engage an accountant like us here at WealthSafe who specializes in cryptos. When transferring, sending money between wallets, always do a small test amount first. It is a very volatile market, so understand what you're doing and the risks involved. Watch out for security phishing scams. And finally, security is the number one priority. Store your Bitcoin, altcoins in a hard wallet. Now, as a rule of thumb, I do recommend getting a hard wallet if you have more than a couple of weeks worth of your pay in cryptocurrencies. Phishing. Phishers send you a message with a link to a website that looks like it's legitimate, like a PayPal or your bank, but it is not the actual website. What they do is that they steal your information and then your money. So always check the URL and save it to your bookmark, and only use that one when accessing the site. Don't trust hotel Wi-Fi. Ensure your private key seed phrase is secured, because if you lose it, you've lost all of your cryptos and ultimately you've lost your money. Always use the two-factor authenticator as an added layer of protection. Do not trust messages or links sent to you randomly via email, Telegram, Reddit, Twitter, Discord, unless you know the source. Make a backup of your private key and password, but do not store it, save it on your computer, on your phone, Google Drive, Dropbox, or other cloud storage, because if those accounts are compromised, your funds will be stolen. Stay safe with your cryptos. Set up correctly from the beginning, or if you realize or suspect you have a problem in your setup, see a specialist immediately. Don't delay. Cryptos are rapidly going mainstream, and now is the time to act. It's an exciting time to be in crypto. Here at WealthSafe, we are all about setting you up properly right from the start, so you don't get any nasty surprises when you want to cash out and take profits. As experienced experts, we help you create the most robust structures for your cryptos, understanding that every situation is unique and requires tailored and bespoke planning and implementation, ensuring that your cryptos are protected while minimizing your tax obligations. Our proven crypto wealth control formula is designed to cover all the bases, giving you maximum advantages while ensuring you stay 100% ATO compliant. If you want to learn more about how we can help you set up for the opportunities to come and maximize your protection, book your complimentary crypto wealth control strategy session, where you'll walk away with complete clarity on your options and advantages for success. All the links are below this video. I look forward to helping you soon.